Hey traders, checking into the stock market today. We had an all-out bear fest out there led to the downside by Tesla with a massive sell-off. We've got after-hours earnings reactions in Microsoft and Google, magnifying the move to the downside. Bears in complete control, fear lows breaking. Lots to check in on. All right, so we headed into today with hourly trend changes needing to be proven by the bulls if we were going to see any daily kind of bounce get going. And that obviously did not happen. First thing right out of the gate, I was live streaming publicly this morning and very clearly could see something is different about today. And it very quickly became apparent that Tesla's massive sell-off on the morning was having a negative impact on SPY and QQQ, just dragging everything down to extremes. So we can say that Tesla had a news reaction, just in the sense that it was a fundamental reaction to Musk and Twitter. So we know that that is a big reason for this sell-off. And again, not really seeing it yesterday. So certainly this shows me likely unwinding of large positions. But the 5-minute RSI went out the window. It didn't mean a thing. We were down with a 5-minute RSI at 8, 5, 4, all the way down. And again, because of the weight that Tesla has in SPY and QQQ, it definitely added a significant amount of downward pressure to those ETFs. So you're going to hear me saying a lot, burden on bulls, because we are in a bearish environment, obviously, and every single time frame that we confirm bearish, the longer the time frame, the longer it's going to take for bulls to regain that trend. So in the past, we've seen drops, absolutely, but those drops have been fast and hard and resulted in V-shaped bounces. So again, going back, when's the last time the S&P 500 has confirmed a monthly lower high and lower low? The answer is back in 2015 and then one other time back in 2008. We've seen big drops. The CVID drop wasn't a downtrend. It was just a straight drop and then a V-shaped bounce. So if you are changing trends bearish, it takes that much longer to then change them bullish again. Meaning, if we confirm a monthly downtrend here on the S&P 500, which still has another level to break, we're testing that support now, but let's just say that it does, we then have to confirm a daily trend change. We then bounce and we set a weekly lower high. We then have to confirm a weekly trend change. We then bounce and scout a monthly lower high. We then need a monthly trend change. So it takes a long time to regain those trends. So we're not in a monthly downtrend yet, but it's something that we're keeping an eye on because that would just be another longer term time frame to add to the bear column. And we are seeing all of our major sectors dropping at the same time. So obviously a significant amount of weakness. And the drop or the bounce that we saw yesterday cooled off all short-term RSI levels. So again, my mindset, just keep repeating myself, I am only looking for bounces, which I love. I'm only looking for counter trend bounces in historical extreme RSI levels, or if the bulls prove something to me on the daily time frame. So I know that bulls won't prove anything to me on the daily time frame for days at the very minimum. We would need to bounce for 3 days and I'd say, okay, I'm paying attention now, but I am just scouting daily lower highs on a ton of individual names, and my trading style being a trading style that is favorable in bullish environments, for me, it just means pulling back the reins and slowing way down and being more patient. So if I don't nail the short first thing in the morning, we've seen a lot of mornings where the bears just come out of the gate firing first thing, and here's the NASDAQ this morning. And if you're not in a trade in the first 10 minutes, now you don't want to chase. The bears continue their complete control. So for me personally, I will be perfectly fine just watching that happen and waiting for the bounce and saying, all right, I'll catch you on the 15-minute lower high. I'll catch you on the hourly lower high, waiting for that bounce to come to me. That is the style that I am going to be approaching this market. There will be times where I look to be a little bit more aggressive bearish or a little bit more aggressive bullish, but I have, obviously, with the price action that we're seeing since last Thursday, and again, for me, last Thursday was a big pivot where we had that quadruple top on the NASDAQ futures and we had everything selling off, not just one or two sectors, all commodities, money leaving the market. Today was another day, money leaving the market. So everything dropping significantly in unison. So again, we are not at historical bounce levels. So what would I need to be looking for a bounce from here? Well, if we look at the S&P 500 futures chart, we can see the daily is not oversold. And I can see that, well, just a month ago, 2 months ago, that's 3 months ago. Life's flying by, folks. Take it in. So 3 months ago, daily RSI dropped down into the 24s. So I don't have to go back far at all to see that happen and say, okay, well, here's the RSI at 32. So what does that tell me? That tells me we can absolutely see further downside from here. But it feels like we've been dropping so hard forever. It's been 4 days. It's a big drop, but we're not at extremes. And it's the kind of thing where I don't care if I miss a daily bounce, because again, if we're going to set a bottom, if we're going to set a fear bottom and then shift into a bullish market environment, it's not going to happen overnight. It'll take a long time to develop some of these trend changes. And again, it's patience. I am in patient mode. And there are some traders right now who are looking to be real aggressive. There are bearish traders out there where this year is going to make their next few years. And that is their trading style. Absolutely, go for it. Be aggressive. But I know who I am as a trader, and I'm not going to try and change who I am as a trader. We definitely want to pivot, and we definitely want to try new things and experiment with new trading styles and play around with things like that. But after last year having been a really good year, making multiple years worth of gains for me in my bullish environment, playing back burner bounces in Bitcoin and crypto, for me, I am going to play bearish. I'm going to look for base hits. I'm going to patiently wait with a whole bunch of cash, and I will look to take advantage of when bulls show back up again. Maybe it's in a year, maybe it's in 2 years, maybe the housing market collapses and I take half of my market portfolio and I put it into real estate. Who knows? But I do know that I am nice and comfortable, mostly cash. What about inflation? Yeah, absolutely. Inflation is a thing that we need to be concerned with. But DXY is extremely strong and going up. And I am just looking to preserve gains from the last decade, tack on, and buy fear. But I'm not buying fear now. I buy fear all the time, but not now. So what would I need? I would need to give me the daily RSI in the low 20s and match that with a 4-hour RSI in the teens. All right, I'm interested. But until then, not playing counter trend, looking for bounces. So S&P 500 fear low here is still holding, but obviously the probabilities that it's going to break are increasing because QQQ just broke. So we got 409.37, the adjusted level, and we are currently, after hours here, we're down another $3. So we're about 1% above this level after hours. And again, even if we hold it initially, we're going to scout a daily lower high to be the result of the next bounce that we see from here. And because of the market perception and because of the sentiment, there will be bears looking to play each lower high. So just keep that in mind, and I will be one of them. As long as we are in a daily downtrend, I will look to be bearish on daily bounces, scouting lower highs. The NASDAQ is dumping after hours on earnings reactions. So here was the close, and here's after hours. And just to look, Microsoft, not collapsing. We dropped, we had a solid bounce, but tightening up, it's bearish. It's a bearish reaction, we can say that much. And Google, a more significant bearish reaction. But the bottom line is, they're both going down, which drags down QQQ, which drags down the market. So QQQ, fear low has broken. So 317.06 was the adjusted level. After hours, we're down at 312. What levels are we looking at from here? 305.92, 295.66. So bigger picture, I was looking at this and saying, comparing to the CVID lows, we are still, where we're at after hours, 100% higher than the CVID lows. Nope, a little bit less. That would be 326. But 95% higher than where we were back then. That seems like an extreme amount. That is nuts. Am I bearish? We're the top's in, generational top for 5 years? No, absolutely. I'm bearish price action trends on weekly and daily and shorter term time frames, but I am still keeping bigger picture in mind, and I do still look at SPY on the 2-month time frame, and I do still see absolutely nothing wrong with this long-term chart. Now, does that mean that we're going to V-shape to all-time highs? No, that was definitely on the table as a possibility for me, and obviously the inability to change the weekly trend was a major factor in squashing that happening in the short term, but I am not on bear collapse. I'm not on team bear collapse. If I was, I'd be going aggressively bearish, but I'm not. So again, I just want to state where I'm at and what my perspective is. And if we get back, you know, I'm measuring fibs to be a guide here. And I'm still looking at, you know, how much we can pull back from where we came from at the CVID lows and where we stand. So again, bearish, absolutely. Bearish on the time frames that are in downtrends, absolutely. But end of the world, market top, Great Depression, not on board yet. That being said, definitely giving credit to the bears. They have proven a lot in the last 4 days of trading. A lot of proving. So SMH, we know our lead bear sectors are certainly not going to be holding on well in this kind of market environment, and SMH is seeing another clear leg down. It will continue to be our lead bear sector as long as the price levels tell us that and the trends. So here we are looking at 221.63 as the next level. But again, it's the kind of thing, I say this so many times, when you're in a fear environment, individual sectors, individual names, their levels matter much less. Yes, they are still a factor, but I'm not going to look at this level and say, you know, SMH is probably going to bounce off this level, because I know that if QQQ doesn't bounce, SMH isn't bouncing. SMH is going to be dictated by where QQQ bounces. And QQQ is going to be dictated by where some of its major holdings bounce. I mean, it's something like Apple, Microsoft, Amazon. I think that's 30% of QQQ. So if those names aren't bouncing, semiconductors are not going to bounce. And again, today was just full display of the automated, correlated trading environment that we are in at this day and age. The fact that Tesla, you know, in my opinion, Tesla hurt gold miners today. Like, does that make any fundamental sense? No, but if Tesla's bringing down, QQQ is bringing down SPY, is bringing down miners, it's all interrelated. And that's because there's so many automated bots and trading systems that are reacting to all this different price information. And that is the game that we are currently playing in this market right now. So again, it's always good to, you know, if you're feeling fear or things like that, it's always good to take a step back, but shift that bias if you have a bull bias and you're constantly trying to play bullish in this environment, because things are different. Things are shifting, absolutely. But considering how much more brutal it was in the not so distant past, got a long way to go before it gets real ugly, in my opinion. All right. So next time SMH bounces, we're going to look for an hourly lower high. We're dropping after hours much more significantly than most sectors, so we are responding to Microsoft and Google earnings here. So I can say anything under 233 is just an hourly lower high. So if we open tomorrow and drop first thing, I might not be comfortable going shorting right out of the gate if we're in hourly oversold conditions, but I know that eventually we will see an hourly bounce, and then that's when I will look to make my entry. And the same thing happened with Tesla today. So while I was live streaming, Tesla was dumping. It caught me off guard as far as the magnitude of that dump. I knew not to be looking to play it for a bounce, which was a good thing. I pondered playing 973 support for a bounce, but we fortunately sliced right through it, and I just was hands off because it was clear this is unusual. This is different. So I missed all this downside. What did I do? I sat and I patiently waited, and I waited for the 15-minute oversold bounce for the bear flag, and I shorted it there. And so we bounced, and the red flag for me of it being a bear flag was this break right here. So we know flags have breaks with a lack of follow through. This was a little 2-minute higher low and higher high, higher low and another higher high. This bull break was a bull break by 45 cents that instantly pulled back. As soon as that happens, I say that is a 15-minute bear flag likely forming. I didn't assume it was going to be one. I didn't short the resistance break. I saw that reaction and I said, all right, I'm going to short the next 1-minute lower high. We then formed a 1-minute inside bar. As soon as that inside bar breaks bear, I'm short and my stop is over this high. So I was filled in the 905s and my stop loss was 907.01. I was risking $2 if I was wrong. And we then rolled over. I took a little bit of profit initially and then held the rest until somewhere in the 890s. I exited the rest. and then definitely missed another leg down into the end of the day. But that was a solid win. I mean, that's my day maker right there. But the point is patiently waiting. Patiently waiting. And it's the kind of thing where, oh, I missed the bear trade on the morning. Does that mean I'm now looking bullish? No, that doesn't mean that we have to be doing that. That means I'm patiently waiting, knowing I'm scouting the next lower high. And again, I'm just flipping my mindset with it. This is how I traded the crypto space where, oh man, euphoria, breakout all-time highs. I'll buy the next 5-minute oversold. I'm not going to chase it up there. I will buy the 5-minute back burner. Speaking of back burners, they work in the opposite direction in a very bearish market environment. Look at the NASDAQ futures chart, 15-minute time frame. We had a scenario where yesterday, 15-minute RSI hit over 70 for the first time after a significant Thursday, Friday drop, and that marked a temporary top. So incorporate RSI back burners for bears into your trading strategy. For example, next daily bounce that we see, if hourly RSI gets up to 70, that is something that bears are watching for. As far as Tesla is concerned, talked about the importance of that 973 level. Boy, did they take that out. So weekly downtrend confirmed. And now the question is, can we hold 700 for a monthly tightening range, or do we lose 700 and confirm a monthly downtrend? Those are the two scenarios on the table. But we know the bears are in absolute complete control. We're down another $10 after hours. RSI is out the window for me. This is a fundamental news reaction for me. And whenever that happens, RSI is a much less useful tool because it can get to extremes that are unusual. Because it is the big money that is reacting to the fundamentals more than the technicals. So, if it's just a regular old hourly oversold with no news, it's a lot different than what we're seeing today. So Tesla, we got a short-term little resistance level at 900, but we're just going to be watching for an hourly lower high to be the result of the next bounce. We'll be watching for a daily lower high to be the result of the next bounce. We'll be watching for a weekly lower high to be the result of the next bounce. That's what I'm talking about. When you get the bears in control of one time frame after another, it takes a long time to get them back. XLV, daily inside bar, it was a lead bull. It was holding on the best. It was down 1.8%. But everybody else down more. So again, the most notable factors today, everything dropping at the same time, money leaving markets. And that's an environment where it can even be the kind of thing where if you see all major sectors hitting the low of the day at the same time, just turn off your bounce desire, because that is the ideal bear day. I mean, the ideal bear scenario is that happening. I don't want to be looking bullish in the most ideal bearish scenario. So XLV, next time we bounce, we'll scout a daily lower high. Its weekly chart is still obviously a lot stronger than many other names, but look at the size of this retracement. This pullback is big enough that the next time we bounce, we will be scouting a weekly lower high. Shifting market environment. There's no doubt about it at this point. I was on the fence until Thursday. XLF down near its lows. So we're at the fear low. 34.45 is a little level. We are in a weekly downtrend. We have lost the monthly higher lows. Well, actually, I won't say that yet. We got a level here. Let's keep an eye on 34.45. IWM, all bears. Again, lead bear sectors are staying lead bears until something changes. So we got semiconductors, biotech, IWM, QQQ are the lead bear sectors. Cannabis, definitely cannabis. So IWM, fresh fear lows, weekly downtrends continue. Monthly downtrend now with a lower high and lower low. Monthly bear flag is confirming here. I guess we haven't broke officially. We got a double bottom at the moment, but we're on the verge of breaking. So if we do, that would then put us in a monthly, weekly, daily, hourly downtrend on every single time frame. And again, if I'm looking bullish, I don't care if I missed the bottom. When I played the Facebook and Tesla bounces weeks ago for double-digit percentage gains in both, I was 8-10% off the lows at least. So we don't need to nail the bottom. If we're going to see a bottom that has significant follow-through, there will be trend changes on the hourly, then on the daily, then on the weekly. Again, the same thing with those Chinese names. Oh man, did I miss the bottom? Was that the time to buy for the next decade? We didn't change the weekly trend. No FOMO when longer term trends have to change back to bulls. What were we just looking at? IWM. So all bears still. Yeah. Biotech sector, big leg down. All bears. Again, not even daily oversold. I know it feels like, oh man, it's so weak. We've been dropping so much, but we're not daily oversold on any of these ETFs. We're approaching. And then I'll start to get interested in some bounces if everything is daily oversold and the shorter term time frames align in some historical oversold levels, but for not even daily oversold, not yet. Biotech sector next level from here. Looking down at 72.21. There's a gap to fill at 76.45. Next time we bounce, tons of space for a daily lower high. US 10 years. So starting to see a little shift. Again, the weekly higher low stair step pattern every week did break. But we know that retracement wise, we have a lot of space to keep this weekly consolidation healthy. But it is the first daily close under the EMA 12 in 6 weeks. So again, that's something we want to pay attention to. Whenever you can say the first time blah, blah, blah has happened in X amount of time, certainly 10 years matters more than 6 weeks, but we're paying attention when something changes for the first time in 6 weeks. So we got support level down here at 2648. If we were to hold that level, we'd be watching for a head and shoulders where we're looking for a lower high next bounce. But we will be looking for a weekly higher low, bigger picture. TLT bouncing as well. Again, the 2-day time frame still has a ton of work to do. Just keep an eye on these things. The dollar is still all bull, ripping towards 103. Tons of space for a daily higher low next consolidation. And we're heading into some of the most extended RSI that we've seen in the last 5-7 years. But again, historically, we can see RSI can easily get to the upper 80s. So that doesn't mean much to me. If I could look back and say, well, the dollar has rejected from 78 RSI 3 times in the last 15 years, then that means something to me. But that just reminds me, okay, scroll back. All right, RSI doesn't mean a whole lot because we can get way more extended and certainly have. Gold is still weak, but a daily inside bar, trying to shape up a 4-hour bounce with some follow through. EMA 12 is still resistance. The miners closed down at the low of the day, and they're feeling the broader market weakness, bearish correlation to the metals because of the broader market weakness. So that's what I'm talking about, the fact that Tesla brings down the broader market, brings down the miners. All right, and so that's where we stand. So tomorrow, if we gap down, am I looking for a bounce? Depends on where RSI levels are at, but probably not. This is a notable bearish market environment. I was more aggressive with bounces in other kinds of market environments because, again, my aggressiveness for bounces matches the bears, where if we're collapsing, then I'm scouting a bounce for the V-shape bounce. And we're starting to get there, but not yet. Daily oversold, 4-hour RSI in the low 20s, 12-hour RSI oversold. Then I start looking for a bounce. But also keeping in mind that this week has further earnings. Then we got the FOMC. So we are in fundamental prime time, and I am a technical trader. So fundamental prime time does not suit my trading style. I'm looking forward to when the FOMC is out of the way and we can get out of the way of fundamentals, at least for the short term, as far as individual companies are concerned with their earnings. All right. Congrats to the bears. Big time wins. And we will reach a point where everybody and their mother is bearish and the last of the bulls capitulate. So social media will definitely be, the sentiment will be a little bit of a factor that I look for when I'm scouting some bounces, but getting real picky with those bounces. Preserving capital, playing bearish on lower highs, sticking to day trading until we're through the FOMC. And then we'll see where we stand when we come out the other side of that FOMC in about 1 week and 1 day. All right, do good things. Thanks for checking out the morning live stream. We do that every day. And we'll see you tomorrow. This is edible Sochan. Got this from a buddy. Just stuck some in a pot, stuck it in the ground, and now it's going to be a pretty prolific plant up here. I had extra potatoes from last year, and I planted a bunch in the garden, but had extra. So I just stuck them in the compost pile. We'll see if we get any potatoes out of them. These are second year peonies. I'm new to peonies, but they have a symbiotic relationship with these ants. And these ants go around and they like these buds. And some people say that what they do allows the plant to flower, allows it to open up easier. But either way, they're just taking a little bit of the sap that's on the flowers and keeping any other predator insects off. Got some flowering chives or green onions, something in that family. Some black-eyed Susan starting to come up. Just did a whole bunch of flower shopping. Gotta put those into the ground. Yarrow starting to put out some flowers. Not the flowers, but just the buds at this point. And we got butterfly plant. Or that's milkweed.